Acts are down 69% and jobs are up. And Trump says it's time to slash interest rates. But Jerome Powell still has his hands on the brake. So why is that and what is going on? Today, together, we're breaking down the economic tug-of-war that could decide the next bull run. Welcome back to WildPodX. Tony here. Today is 11th of April 2025. Here on this channel, we talk about everything related to money, investing, crypto, and psychology. If you're keen to stay ahead in finance, be sure to subscribe. Now, let's plunge into today's market updates. Let's take a quick look at where we're standing. Bitcoin is currently trading at approximately $81,000. Ethereum is trading at $1,500. And Tesla stock is down over 7%, trading at $252. Now, let's talk about Ethereum to Bitcoin ratio. Back in 2017, it was 0.15, and at 2021, it dropped to 0.085. And now it's only at 0.019. I mean, just looking at the chart alone, it's completely reasonable to ask, is Ethereum on its last leg? Personally, I like to think the best risk-reward opportunity arises when a quality asset is down and out, especially when investors are devastated. And Ethereum seems to fit that bill perfectly. Also, there's more positive news about Ethereum that no one talks about. We'll touch up on that later in today's news session. In today's morning deep dive, we're going into why President Donald Trump is urging Federal Reserve Chairman Jerome Powell to cut interest rates. Trump recently stated, "This would be the perfect time for Fed Chairman Jerome Powell to cut interest rate. He's always late, but he could now change his image, and quickly." Trump said in a post on Truth Social, "Energy prices are down, interest rates are down, inflation are down, even eggs are down 69%, and jobs are up, all within 2 months. A big win for America. Cut interest rates, Jerome, and stop playing politics." Now, why does it matter to you, me, or anyone who's not named Powell? Because interest rates are like the heartbeat of the economy. When the Fed cuts them, money becomes cheaper to borrow. Your mortgage might get lighter. Businesses invest more, and stock market usually jump. And even our favorite, Bitcoin, tends to pump. But when the rates stay high, it is like walking through financial molasses. Borrowing dries up, growth slows down, and investors start eyeing 5% treasury bond instead of risk asset. So Trump's point is basically saying inflation are down, energy prices are down, and even eggs are down 69%. Jobs, though, on the other hand, went up. So what are you waiting for, Powell? A handwritten invitation? The numbers, Trump's argue, screams cut rate. And politically, it would juice the whole economy just in time to make his comeback look like an economic masterstroke. Whether you love him or hate him, it's classic Trump. He will take that win and ride that wave all day, every day. But Powell is definitely not on the same page. In fact, he's not even reading the same book. The Fed's chair is still holding the line, worried that dropping the rate too soon could let inflation sneak back in the door like a bad sequel. And here's where it gets interesting. This isn't just an economic debate, it's political. Trump appointed Powell in 2017, but their relationship soared faster than milk in the Arizona sun. Now Trump's pressuring him again, and Powell has to balance economic data with the optics of being seen as a political pawn. It's a tightrope act. Adding to the complexity are Trump's tariffs, taxes on imported goods. Because technically these could lead to higher prices, aka inflation, and make the Fed's job trickier. It's like trying to drive on the road with unexpected speed bumps. At the end of the day, this tug-of-war between Trump and Powell matters because it affects everything from your car loan to your crypto bags. If Powell caves, we could see markets soar. But if he stands firm, expect some turbulence. Either way, don't just watch the White House, watch the Fed. That's where the real money play is happening. Now let's take a look at today's top news. The first news. The SEC approved several spot Ethereum ETFs, allowing them to be listed and traded on their respective exchange. This marks a significant milestone for Ethereum and broader crypto market. I think just this alone could be a very good indicator that Ethereum is definitely not dead. If anything, it's gonna get a lot of liquidity soon. Second news. After experiencing a significant hack resulting in the loss of approximately $1.4 billion, cryptocurrency exchange Bybit has managed to replenish its reserve and regain a 7% market share. The firm secured emergency funding from companies including Galaxy Digital, Falcon X, and Wintermute. This is definitely a very good news, and kudos to the Bybit team who did so well in this crisis. The third news, just when you thought the AI world couldn't get any more dramatic, OpenAI has countersued Elon Musk, accusing him of a campaign of harassment and a deceptive $97.4 billion takeover bid aimed to undermining the company. This legal battle escalated ongoing feud between Musk, a co-founder of OpenAI, and the organization he helped establish in 2015. Musk, who departed OpenAI in 2018, has been vocal about his concern regarding the company's shift from its non-profit origin to a for-profit model. He alleged that OpenAI has strayed from its mission of developing AI for the benefit of humanity. In response, OpenAI claimed Musk's action, including the alleged sham takeover bid, were designed to disrupt its operation and distract from its own AI ventures, such as xAI. The lawsuit also highlighted the broader tension in the AI industry, where ethical considerations and profits motivates often collide. OpenAI's countersuit seems to prevent Musk from continuing what is described as a pattern of disruptive behavior that threatens its relationship with investor and customer. As this legal saga unfolds, it's clear that the stakes are high, not just for the party involved, but for the future direction of AI development. Will this courtroom clash lead to re-evaluation of AI governance and ethics? Or is it merely a high-profile dispute between tech titans? Only time will tell. That's a wrap for WellPadX. Ride the waves, trust the compounding, stay invested, and I'll see you tomorrow.